February 2026. The numbers just came out, and they're catastrophic. Iowa farmers lost $9.3 billion in 2025. Not revenue decline, not reduced profits, actual losses. The largest single-year agricultural loss in Iowa history. And it connects directly to one thing: trade policy that destroyed corn and soybean exports. China stopped buying, Mexico reduced purchases dramatically. The European Union imposed new tariffs. South Korea shifted to Brazilian suppliers. And Iowa farmers watched their two biggest crops lose access to markets worth billions annually. This isn't theory. This isn't projection. This already happened. The export collapse is complete, and Iowa agriculture is being destroyed in real time. The export collapse. Iowa State University released the economic analysis February 3, 2026. The report analyzed complete 2025 data: farm income, crop sales, input costs, debt levels. The conclusion was devastating. Iowa farmers suffered net losses of $9.3 billion in 2025. Dr. Chad Hart, agricultural economist at Iowa State, put it plainly: this is the worst financial year for Iowa agriculture since the 1980s farm crisis, and the primary driver is export market destruction from trade policy decisions. The export numbers tell the story, and it starts with China. The China collapse. China was Iowa's largest export market for soybeans. They purchased billions in Iowa soybeans annually. That market has been decimated. 2025, China's purchases of Iowa soybeans collapsed by 86%, billions in lost sales. Why? Trade tensions that started in 2024 escalated through 2025. Tariffs, counter-tariffs, retaliatory measures, political disputes that turned into economic warfare. China didn't stop buying soybeans. They just stopped buying American soybeans. They shifted purchases to Brazil and Argentina. Brazilian soybean exports to China surged. Argentina's exports to China rose dramatically. The soybeans China needed didn't disappear. American farmers just lost access to selling them. Tom Richardson farms corn and soybeans in Story County. His soybean crop in 2025, good yields, quality crop. In 2023, I sold soybeans at strong prices. Most went to crushers shipping to China. 2025, prices collapsed. Same quality, same crop, but the export market disappeared. I lost over $650,000 in soybean revenue compared to 2023 prices. On the same acres, growing the same crop. Multiply Tom's experience across millions of acres of Iowa soybeans. The export collapse destroyed billions in farmer income. The Mexico reduction. Mexico is a critical market for Iowa corn. They purchased billions in Iowa corn annually. Feed corn for livestock, food-grade corn for processing. 2025, Mexico's purchases of Iowa corn dropped by hundreds of millions of dollars. Mexico didn't reduce corn imports. They shifted suppliers. Increased purchases from Ukraine, increased purchases from Argentina. Trade policy disputes created uncertainty. Shipping delays from new inspection requirements. Tariff threats that made long-term contracts risky. Mexican buyers found more reliable suppliers elsewhere. James Holland farms corn in Hamilton County. I had a contract with a Mexican feed buyer for 5 years. 2024, they canceled. Said the trade situation made U.S. corn too risky. Too much political uncertainty. They shifted to Ukrainian suppliers. I lost a guaranteed buyer for my entire crop. James isn't getting that buyer back. They've committed to long-term contracts with Ukrainian suppliers. The European Union tariffs. The European Union imposed new agricultural tariffs in June 2025, part of broader trade disputes over industrial policy and digital regulations. The tariffs targeted U.S. corn, soybeans, and pork products. Significant percentage increases that made American crops uncompetitive. Iowa corn exports to the EU dropped dramatically. Soybean exports to the EU declined severely. Sarah Mitchell farms in Grundy County. She grows specialty soybeans contracted for European food processing. I had premium contracts paying top dollar for food-grade soybeans going to German processors. The tariffs made our soybeans uncompetitive. The processors canceled contracts and shifted to Canadian suppliers. I sold those same soybeans on the regular market at much lower prices, lost over $375,000 in revenue from tariffs I had no control over. The South Korea shift. South Korea is a smaller but critical market for high-quality Iowa corn. They purchased hundreds of millions in Iowa corn annually. 2025, South Korean purchases dropped by over 70%. South Korea shifted purchases to Brazil and Australia. Concerns about U.S. trade policy reliability, worries about future tariff disputes, long-term supply chain planning that excluded U.S. suppliers. Robert Chen farms in Wright County. He grows high-oil corn contracted for Asian markets. South Korean buyers paid premiums for our high-oil corn. 2025, those contracts disappeared. I grew the same corn, but sold it as regular corn, with no premium. Lost nearly $100,000 in premium payments. These aren't hypothetical losses. This is money Robert budgeted for, counted on, used to project farm profitability. Gone because buyers changed suppliers due to trade policy they didn't create. The price collapse. When export markets disappear, domestic prices collapse. Supply and demand. Iowa farmers produced the same amount of corn and soybeans, but the buyers vanished. Corn prices in Iowa fell dramatically through 2025. Soybeans saw even steeper declines. On a typical Iowa corn farm, that price decline equals nearly $200,000 in lost revenue. Same acres, same yields, less money because export markets collapsed. Marcus Webb farms corn and soybeans in Cass County. I did everything right in 2025. Best yields I've ever had. Record production. And I lost over $800,000 because prices collapsed from export market destruction. The stored grain crisis. Iowa farmers responded to low prices by storing grain, hoping prices would recover. They haven't. Iowa commercial grain storage facilities are at capacity. On-farm storage nearly full. Farmers sitting on billions of bushels waiting for prices to improve. But prices aren't improving. Export markets aren't returning. And stored grain has costs. Storage fees add up quickly. Money spent waiting for prices that never recovered. Tom Richardson has thousands of bushels of soybeans in on-farm storage since October 2025. I'm paying substantial costs in propane for aeration to keep the beans from spoiling. I have nearly $2 million in soybeans sitting in bins, earning nothing while I pay storage costs and can't use that money to pay bills. If I sell now, prices are still terrible. If I hold longer, storage costs keep rising. There's no winning move. The debt crisis. The $9.3 billion in losses created a farm debt crisis in Iowa. Agricultural loan delinquencies increased dramatically. Banks holding tens of billions in Iowa farm loans watching their portfolios deteriorate rapidly. Chapter 12. Farm bankruptcies in Iowa jumped 62% in 2025 compared to 2024. First 6 weeks of 2026, already seeing filings at record pace. These aren't small operations. These are commercial farms with modern equipment, good management, and sound practices. They're going bankrupt because trade policy destroyed their markets. James Holland filed Chapter 12 in January 2026. Fourth generation farm. I lost over $1 million in 2025 from export market collapse. I can't borrow more money. Can't survive another year like that. Bankruptcy is the only option. Banks are responding by cutting credit, refusing to extend operating loans, demanding immediate debt reduction, making the crisis worse. The equipment market death. Export market destruction killed equipment sales in Iowa. John Deere dealerships across Iowa report equipment sales down dramatically in 2025. Farmers losing billions don't buy new tractors. Legacy equipment operating locations across Iowa announced. Closure of 4 dealerships in January 2026. Combined employment reduction, over 140 jobs. The used equipment market collapsed too. Farmers trying to sell equipment to raise cash discovered there are no buyers. A tractor listed for sale in Iowa in February 2026, asking price drastically below original purchase price. No buyers at any price. When export markets die, equipment markets die. When equipment markets die, dealership jobs disappear. The chain reaction destroys rural economies. The supplier Cascade grain elevators, seed companies, fertilizer dealers, and ag service providers all depend on farm income. When farmers lose $9.3 billion, every business connected to agriculture suffers. Landis Cooperative, serving Iowa farmers across dozens of locations, reported 2025 revenues down hundreds of millions compared to 2024. Result: workforce reduction of hundreds of positions. Seed sales in Iowa dropped significantly. Farmers planted fewer acres, used cheaper seed varieties, reduced input costs anywhere possible. Fertilizer sales declined substantially. Equipment maintenance deferred, service calls canceled. Every ag-related business seeing revenue collapse. Small-town Iowa economies depend on farm income. When that income disappears, towns die. Main Street businesses close. Schools lose enrollment. Hospitals struggle. Young people leave. The $9.3 billion loss isn't just hitting farmers. It's destroying rural Iowa. The federal inaction. Iowa farmers expected federal assistance. Trade mitigation payments like those provided during previous trade disputes. Emergency support for farmers losing market access through no fault of their own. They got nothing. Congress held hearings in September 2025. Iowa farmers testified. Agricultural economists presented data. Export market collapse was documented thoroughly. No legislation passed, no emergency payments authorized, no trade mitigation programs established. The USDA acknowledged challenges in agricultural exports, but provided no financial assistance programs addressing the scale of losses. Iowa's congressional delegation demanded action. Senator Chuck Grassley called the situation a betrayal of Iowa farmers who did everything right and lost markets to trade policy failures. No response from the administration, no federal relief. Iowa farmers are absorbing $9.3 billion in losses alone. The current reality: we're in early February 2026. Planting season approaches, and Iowa farmers are making decisions based on a reality where export markets don't exist. Corn acres in Iowa projected to decline substantially in 2026. Farmers planting less because they can't afford losses on more acres. Soybean acres projected to drop significantly. Same reason. Why plant crops that lose money when export markets are gone? Tom Richardson is reducing planted acres dramatically in 2026. I can't afford to farm all my acres. Export markets are dead, prices are terrible. I'm planting less and hoping I lose less. Money. This is happening across Iowa. Fewer acres planted, less production, reduced farm income, more financial distress. The final truth. Somewhere tonight, an Iowa corn farmer is looking at contracts from 2023, when Chinese buyers were purchasing their soybeans, remembering when markets existed, when farming was profitable, wondering if those export markets will ever return. Somewhere tonight, an Iowa banker is reviewing farm loan portfolios, knowing delinquencies are at record levels, knowing more defaults are coming, knowing the $9.3 billion in farm losses will create more foreclosures. Somewhere tonight, a fourth-generation Iowa farmer is telling their kids there won't be a fifth generation. Because trade policy destroyed export markets. Because $9.3 billion in losses can't be survived. Because the farm ends here. Iowa farmers lost $9.3 billion in 2025. Not from bad weather, not from poor management, from trade policy that gave their markets to Brazilian, Argentine, and Ukrainian. Farmers. The export markets are gone. The losses are real. And Iowa agriculture is being destroyed. Leave a comment below. Should farmers receive compensation for losing export markets to trade policy decisions they didn't make? And hit subscribe because this export crisis isn't over. The losses are continuing in 2026.